Hello everyone, I am Mrs. M. Priya, Assistant Professor, Department of Commerce, St. Joseph's College of Arts and Science for Women, Hosur. In this video, I am here to present cash flow statement. The term cash in the context of cash flow analysis include the cash balance and the bank balance of your business unit. Cash flow analysis can reveal the causes for even highly profitable firms that experiencing acute the cash storages. The cash flow statement is a statement which portrays the changes in the cash positions between two accounting periods. The advantages of cash flow statement. Historical analysis as guide to forecasting, effective cash management, formulations of financial policies, preparations of cash budget, short-term financial decisions, liquidity positions, and revelations. The limitations of the cash flow statement. Cash flow statement discloses inflows and outflows of cash alone. It reveals the cash balance. It reveals the changes in working capital or the income statement, which displays the overall financial position. Its scope is very limited compared to fund flow statement. It can be easily altered by postponing payments for purchase or delaying collections of receivables. Since non-cash items of expenses and incomes are excluded, it cannot provide a comprehensive picture of a firm's financial position. The importance of cash flow statement. Fund flow analysis portrays all the financial transactions which causes changes in the working capital. But the working capital comprises the various current assets and current liabilities, thus the quantum of cash inflows and outflows cannot be ascertained from the fund flow analysis. The basic objective of financial management is to match the inflows and outflows of the cash in such a way that the numerous demands for cash like payments for expenses, payments to suppliers are promptly managed without maintaining the cash balances. Cash flow analysis positions for the preparations and following the accounting and the cash changes shown and the usefulness, short-term solvency, interdependence, and the preparations of the statements. The preparations of cash flow statement. The cash flow statement is prepared on the same lines as the funds flow statement but is strictly restricted to the sources and the uses of cash. Preparations of the statements is based on the opening and the closing of the balance sheets, the profit and loss account, and other relevant informations. The cash flow statement starts with the cash and bank balances at the commencement of the period. If there is bank overdraft and the cash balance, the net cash balance or net bank overdraft becomes the starting point. The cash flow statement is usually prepared for 1 year on the basis of the balance sheets and additional information. Preparations of the cash flow statement involves the following the steps. First step, it's a comparison of the non-current items. In the case of the non-current items for which no additional information is to be considered, comparisons of the balance is made to determine inflow or outflow of the cash. The accounts for non-current items. In the case of non-current items in respect of which additional information is to be considered, accounts are prepared to determine inflow or outflow of cash. The cash flows from operating activities. This is like for the regular profit and loss account shows only the net profit or loss. It does not disclose the cash generated or cash used in business operations. Hence, to ascertain cash operating profit, adjustments are made for non-cash and non-operating items. Non-cash items are expenses or income which do not cause any changes in cash. Non-operating items refers to expenses or income which are not directly related to the main operations of the company. For example, dividend or interest received, profit or loss, and sale of fixed assets. The adjustments for working capital changes the cash operating profit is to be further adjusted for the working capital, the changes, for the changes in current assets and the current liabilities. The sources of and applications of cash. The cash from operations is like funds from operations, cash from operations, and the current assets. External sources is like fresh as long-term borrowings and sale of investments. Applications of cash is like redemptions of debentures and the preference shares, repayment of bank loans, cash outflow on account of operations, purchase of fixed assets, long-term investments, tax and dividend. Thank you.